Joining us now, Apple shareholder Javier Saade. He's a partner at Fenway Summer Ventures, and Wamsi Mohan, senior analyst with Bank of America Securities. Guys, welcome. Wamsi, what's the next catalyst potentially for this stock either way? Is it reading the shipping lead times once these things come out, trying to figure out what demand looks like?
Yeah, I think that's right, John. Thanks for having me. Look, I think that generally when Apple announces its products, people pay a lot of attention to what the demand trends look like. And one way to infer that is looking at shipping lead times, which you noted. I think that in this particular case with the Pro Max, we still think, which has slight supply issues, the lead times could get extended, which could send an incorrect signal of strong demand. We'll see. I mean, demand could be strong too, but that is indeed the next catalyst. And people are going to look, and we are going to look at what is happening with order rates and build plans in the supply chain, and that's going to give us some tea leaves to look at to understand what demand trends look going through the end of the year and how that bodes for the entire 15 cycle.
Javier, Apple just continuing to run its premium playbook here, but things like Apple Television and Apple Car never happened, even though a lot of people wanted them to get into those things. So as a shareholder, better that they didn't, or you wish they'd break into something big?
I mean, look, this franchise is like nothing the world has ever seen. It generates $200 million of free cash flow a day. And, I think a lot of the impetus on the stock right now, and I think as some of your previous guests were talking about it, the company has moved from purely a top-line growth story, basically because of gravity and the law of big numbers, to a margin story, and their margins are enviable, and they have a lot of levers to pull. The apps, the Apple ecosystem, the apps ecosystem, last year billed $1.1 trillion, of which 90% went to developers. Another thing that I look at with the company in terms of the franchise and the platform is that 90% of teenagers in the United States that have a phone, it's an iPhone. And last time I checked, teenagers have 70 years of runway with very sticky products and very sticky pricing power. So today was a very interesting day for Apple, for sure. But in terms of what this company has been able to achieve, I think they have all kinds of runway.
Wamsi, you have a neutral rating on the stock, but your price target's 210. What would change your mind or shift your investment thesis right now, especially given the fact that your price target is higher than where shares are trading?
Yeah, no, it's a one-year out price target, Morgan, and I appreciate the question. Look, I think that when you look at a story like Apple, right, and then to the points that even Javier just made, very compelling franchise, the fundamentals in the long term are very, very solid. You could have made that case at $125 where the stock was earlier at the beginning of the year, or at $190 when it was mid-year. So the question really is, how does the risk-reward balance really play out when you incorporate things like China, maybe what will happen with the iPhone 15 cycle, while the long-term trajectory is truly very robust. And I agree completely with the point on margins, that there is actually room for a company of this scale of $400 billion in revenue to grow margins is kind of stupendous. Now, all that said, there are times where it's cyclically more attractive and cyclically less attractive. So we're kind of balanced between the two. We think that there is some increased cyclical risk at the moment. As we get more clarity on where some of those cyclical things go, we're always open to having a more constructive or a more negative view on any stock, including Apple. But where we stand today, we think that there is ample amount of risk that we got to factor in, particularly as it pertains to weaker consumer demand in the near term, which is a cyclical risk, also coupled with the fact that there is this increased China risk right now.